Hi, this is Troy Eckard. I'm the CEO and manager of Eckard Land and Acquisition, and I'd like to talk to you for a brief moment about a subject that we get asked quite often, and that subject is, Troy, I'm in a real estate portfolio right now, and I understand that minerals are one of the few assets that are a like-kind investment where I can take profits out of real estate and roll them with the 1031 tax exchange right into minerals. What is causing so many investors to move money out of real estate into minerals, and should I be looking at that myself? And here's my answer. Every single market has a high and a low. There's a favorable trend, a bullish trend, and a bearish trend. In the case of real estate, the way many of our investors are utilizing their real estate profits is they're saying, all right, I bought a piece of property 5 years ago. It's gone up nicely in value. I'm going to liquidate or sell that asset, but I'm going to have some nice gains on it. I have one of two ways of playing those gains. I can invest those gains back into a like-kind asset, which producing oil and gas minerals qualifies. I'll do a 1031 tax exchange, and I'll put that money into an intermediary's account. I'll roll that profit, and I'll go buy some cash flowing minerals. And then once those minerals grow and they mature and they create value over the next 5 years, they'll sell those minerals and they'll roll them right back into real estate. So many of our real estate partners who have holdings in real estate assets, are using the advantage of excellent low-risk cash flowing minerals as an opposite piston whenever real estate looks like a chance to take some profit off the table. Now, the way I view it is that when we talk to our partners and our investors that have real estate, they see the similarity and the analog between real estate and minerals being very close. They also see one big advantage in minerals that they don't have in real estate, and that is they don't have any additional cost. In other words, when I own an apartment complex, I've got taxes and maintenance and lawn and expenses. I have a whole line item to figure out what my net operating income is. And then I'm going to try to sell that property based on a cap rate prevalent on that particular net operating income number. In the case of minerals, when I move that money or I just take earned income and I buy minerals, it's a one-time transaction. I have no further expenses. I don't have hot water heaters to repair. I don't have carpet. I don't have sheetrock. I'm not worried if a tornado hits it. All I care about is I'm moving dollar A into mineral assets. Those mineral assets will generate net income, and at some point in the next 4 or 5 years, when I believe the market is right for those minerals to be sold, I'm going to turn around and cash out. I'll use that same profit that I made on the minerals. I'll do a 1031 exchange right back into real estate. And what I'm hoping to do is ride my real estate up. Oil prices generally are down because that's what drives real estate up. You have lower energy costs, lower production costs, low raw material costs. And when real estate looks like it's getting close to the top, I roll out of that. I buy minerals, which today are at the low, and I ride those minerals back up again. If you look at the pattern, it's very distinct. So the simple answer to your question is, why are investors moving money out of real estate into minerals? Because it's a parallel, direct analog to real estate. It has a lot of similar features. In fact, it has some benefits that real estate does not have. I'm Troy Eckard with Eckard Land and Acquisition. Thanks for the great questions. Keep them coming.